Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence. We're going to take a look at the Nasdaq Biotech Index, one of our flagship indexes, to check in on its performance relative to the market. Mark, it's great to see you as always. Welcome back to Trade Talks. And if we look at the composition of the index, there are a number of mega heavyweight Nasdaq 100 companies within this index.
Yeah, Jill, good point. Names like AstraZeneca, Amgen, Gilead, even Moderna, right? All Nasdaq 100 names at this point. I figured we'd start our conversation by looking at, the top 10 index weights within an index that covers about 370 companies. You mentioned this is one of our flagship indexes. It's been around since 1993, so approaching its 30th birthday, and we certainly think of it here as being the benchmark for the industry. What you see here with the top 10 index weights is it's about 50% of the index are these 10 companies, right? And what you've seen with biotech and in a lot of the challenging performance over the last 6 to 12 months, let's say, is this kind of divergence where the big pool of smaller cap, more speculative names that are heavy on R&D and light on net income, they've really taken it on the chin in terms of valuation and performance. But a lot of the bigger names that are the established winners of the industry, they've kind of held up. We'll get into that in a little bit, but just wanted people to get a sense of, who are the top names? How does the market cap segmentation break out? You see on the right there in the yellow, only about 1/4 of this index is sub $5 billion market cap companies, even though there's several hundred of them. And then in terms of, U.S. versus international, pretty good international sleeve, even though this is a U.S. listings only index. The fact that we have several hundred, international biotech firms listed on the NASDAQ, many of those make it into this index. They're large enough to make it in. So about 1/6 of the index weight comes from internationally based companies as well.
And for year to date for 2022, how has the index performed?
So, it's been actually pretty in line with the broader large cap market. You can see NBI here is down about 26% year to date. As of Friday's close, that's versus 23% year to date on the S&P 500. These are price returns, just keep in mind. Outperforming the NASDAQ 100, the NDX, which was down 31%. And the other real big outperformance is, if you see it in that kind of faded blue line underneath everything, is the SPS IBI, that's the S&P Select Biotech Industry Index. That's down almost 40% year to date. So a really big performance differential, about 17%. We were talking about this during National Biotech Month in January a lot in terms of the differences in index construction. That index is equally weighted or close to equal weight. They call it modified equal weighted. So a lot of these top 10 names that get, 5, 6, 7% each in the Nasdaq Biotech Index, they get less than 1% in the S&P Index. They're weighted, just about the same as all of those smaller cap, more speculative names that have really underperformed. So really big difference in index construction for these two benchmarks. That leads to a difference in index performance. And then up top there, you can see some of those dashed lines. Those are some of the outperformers year to date. One of them in particular, CGen, you can see is up 7% year to date, had a nice spike at the end of last week around some M&A rumors with Merck, potentially looking at them to acquire their cancer portfolio. So, really positive sign for the broader index if we see some of these bigger M&A transactions start to pick back up, which we haven't really seen for about the last year.
Right. And Mark, I'm glad you pointed that out. That really is a glaring difference in terms of the performance and how important construction really does matter for indexes. If we take a look at your next chart here for 2021, and that was an interesting year as we started to get vaccine rollouts and we were returning back to the office and returning back to normal life, you can see how that impacted the biotech indexes.
Yeah, totally. And I mean, last year, what you see is the NBI in the light blue here. That was kind of very middle of the road, right? It started underperforming a little bit earlier in the year versus things like the Nasdaq 100 and the S&P. So it actually ended the year about flat. Despite the recovery, despite the vaccines coming out, 2020 was actually the better year for biotech overall. And then take a look at what happened with the green, which again, as I mentioned earlier, that's the S&P benchmark, down over 20% last year. So you've got 20 percentage points of underperformance last year on top of another 17% this year. Just an incredible incredible performance differential, that last yellow line at the bottom there, that's the Nasdaq Biotech Junior Index, which measures just that sub 5 billion market cap sleeve. And so it's really no surprise, right? You can see if you're more exposed to those smaller cap and speculative names with a biotech benchmark, you're going to underperform, especially when the market for high growth speculative names gets challenged valuations wise, with interest rates going up. And we've talked about this a lot in other conversations, but just a really, really glaring example again of index construction and its impact on performance.
And Mark, to wrap up here, your last slide, taking a look at the growth profiles of these companies.
Yeah, I mean, this is going back almost 10 years in terms of additions to the NBI. I just wanted to bring this chart back to remind people kind of how big of an outlier the past couple of years have been. We saw over 100 additions in 2021. We saw 100 exactly in 2020. That's way above the average for the past 10 years, which has been around 30, 40 names per year. This year, I think it's going to be quite a bit less because the volume of IPOs, not just in biotech, but all across sectors in the US and globally, has been really, really depressed, given the volatility, given the falling valuations. I would actually not be surprised to see this index shrink in terms of net constituents by the end of the year when the reconstitution happens. But again, this was part of the story we started telling late last year. Because of the IPO explosion, because of the number of new entrants to the biotech industry, you saw a big jump up in constituents in the NBI, but not a big impact on index weight. You see it with the S&P benchmark, and that just leads to, again, this performance differential, which will keep going until the index bottoms.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.